Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to today's edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick. This morning, we got a lot of earnings to talk about. We're going to talk Hood. Obviously, we're going to talk about Hood. Duh. And we'll take some questions from our chat. Two guests today. First guest at 8:35, CC Lagator from Options AI. He is great. Frankly, he's great. He has a very good way of looking at the options market, and he always comes fresh with ideas for us on the long side and the short side. So looking forward to CC at 8:35. And at 9, I'll be joined by a new guest, Cormac Kinney. He's the CEO of Diamond Standard. And here is what that company is about in 5 words. You ready? Diamond futures on the blockchain. Yeah. Sound interesting? Yeah, I'm intrigued. That'll be at 9 o'clock. So, in the meantime, smash the like. Reminder, premarketprep.com. Check out the link there to learn more about the 3-hour How to Be a Professional Trader event coming up in, I guess, like 3 weeks? Less than 3 weeks now, guys, right? Less than 3 weeks. All that being said, I'll bring Joel's charts on here. And Joel, how are we doing in the markets this morning?
Good morning, Spencer. We're slipping a little bit here. Pre-market high right there at your close, 44.15. But your all-time closing high price as well. Prior one was 14.25. So just a little resistance there at that level. Pre-market low, 05.25. Looks like that's about to go bye-bye here in a few minutes. We're currently trading 44.06. Crude down $1.21 at 69.34. Gold getting off the mat here, up 9.10, trying to get through that 1840 resistance area. That's at 1823.40. Silver knocking on the door at 26. That's up 30 cents at 25.88. Bitcoin quiet, up $300 at 38,265. Ethereum, that's up $43, 26.50 in the NFT currency. Good morning, Triple D. We have some earnings. I guess we got to start with the Hood.
Well, it didn't have earnings, but
no,
it's just go. So we're going to stay away from earnings, but we do have to start with the Hood. I don't even know what to say. It's now a meme stock, so everybody's talking about it. We know when these things get hot, they can just go. We know when stocks are making new all-time highs, you absolutely cannot be short them. It took out that 38 resistance and did not look back yesterday right off the open, straight up another $10, straight up another $8 after hours. Incredible movement with Robinhood here, HOOD. I don't even know if I guess I did. I day traded it once. I actually lost 15 cents, I think. So I've traded it once, small day trade in it, but I have not really participated in this move whatsoever. Guess I should have been playing it through the 38 breakout.
So there are a couple websites that I mentioned before that I use to sort of track, rather than having to go to Reddit myself and wade through all that mess that these websites will sort of scrape Reddit. And let me show you this right now. This is from Swaggy Stocks, okay? Yeah, that one on the left right there, that sticks out like a sore thumb. Yeah, that's Hood, right? So this is ticker mentions, right, on Wall Street Bets, and this is from QuiverQuant. Okay, again, big one on the left. What's that? That's Hood, right?
It's enormous.
Dominating mentions here the last couple.
It's the social media stock of all social media stocks right now.
You've got Kramer tweeting about it nonstop.
Kramer pumping it
nonstop. And here's my.
He just tweeted 8 minutes ago. Do they want 60 for Hood? I mean, nobody's more influential than Kramer, and now he's and obviously some of it's sarcasm, some of it's not, but he's he's been pumping this thing for 2 days, really.
And here's my theory: is how many stocks can you say all-time high and also $50 in the same sentence, right? Like obviously there are a lot, right? But like of like the big stocks that people that are thick and have heavy volume and tight spreads and widely traded, not many. There are not many stocks of this size with an all-time high of $50, right? As opposed to like $500 or $5,000, right? It's affordable. It's affordable. That's my
I just think it's, a stock that was talked about. Robinhood has talked about, in social media before, was a stock forever, not in a loving sense either. A lot of people giving it hate, but we know when they start talking about it, social media, and people are getting involved, and obviously, stocks making new all-time highs. When stocks start making new all-time highs, those are the best stocks to own. They really are. I mean, you can look at AMD, but this is AMD on steroids. AMD is up every single day. We're down, AMD is up. We're down yesterday in the morning, AMD is trying to go green. I mean, your leaders lead. Hood right now is leading all social media stocks. I don't know when it turns around. I don't know if Kramer's rate is going to go to 60. It could go anywhere. At this point in time, at least, if you're buying it through the 38 breakout, you kind of have some levels. There's nothing now. There's no levels. There's nothing to lean on. It's all air. The thing can whipsaw as much as it wants. So, it's not for me. This type of trading is not for me. If you're watching this show trying to make 100% one day, you're watching the wrong show. We try to teach traders, how to fish for a living. Base hits is more of my style as opposed to home runs. But, I mean, this stock is really hot right now.
A couple things too. I mean, you mentioned actually, Dennis, you've been the level guy on this thing. You mentioned when it came down to the previous day's low. That was
I tweeted it out.
Yeah,
right. I tweeted it out at 33 when it was 33.35 the low, and that day when it was trading at 33.35, I'm like, here's the test. Here's the test. I tweeted it out, and I was saying this is the level, and then somebody tweeted at me, "What are you talking about? There is no levels in HUD. It's only been trading for one day," and I was like, yeah, so there's only one level, and it's the previous day's low. It's the level of all levels. What did it do? It made the double bottom. 33, 35, 33 and a quarter. So it's tough, though. I mean, it did take it out. It's tough. And, now the stock just turns around on a dime, has not stopped going up for 3 straight days. So there, levels, again, those little double bottoms, Joel, those are the reversals. Those work. Something you taught me 25 years ago. Just looking, for 2 consecutive lows or 2 consecutive highs. That's often the times where you can control your risk very well. And a stock doesn't make a new low on the move, all of a sudden people start saying, whoa, okay, well, maybe we're going to, I got something to lean on here now. So it's interesting, Joel. I mean, this is another, this has been the most incredible move, though, in 2 days for an IPO stock in a long time. Like one that's hyped as much as HOOD.
And I mean, you had 2 closes in the same area too, from the first 2 days, 34.85 and then 35.15, and your low on your third day was just above that, so protecting the close. Also, you said 38 was the IPO pricing that held up yesterday, so just when it went through that, caught momentum. And then also you have the traders that like to play something through the IPO high, right? That's a common. So 40 and a quarter, that brought more buyers. Not going to attempt to pick a top in this. 55 even is just what you traded. That's right on the pre-market high. Just keep an eye on where we're at 9:29 and 59 seconds. Huge volume, just printed 55.37. Huge volume too. So the hood on the move today. No targets, no nothing. What can you say? And Dennis, you talk about keeping technical analysis simple. Boy, you can't keep it any more simple than that.
And Nola Trader mentioning that the stock does become optionable today. If you are trading Robinhood, remember August 30th. I know it's a while away, but that is when the lockup expires for all the people, all the Robinhood users that got shares at the IPO. So just have that in the back of your mind.
What's the date on that one?
August 30th.
August 30th.
I know it's a ways away, but have it in the back of your mind.
A lot of people are excited to be selling into that.
Maybe.
That's a long ways away.
It is a ways away.
Yeah, it's a long way.
People asking me, I do have a cold. Yes, my entire family got sick a week ago. My wife, I think I talked about this. We went away camping, come back from camping a week ago. Wife gets sick, gets a flu bug, cold. both kids, the 4-year-old and 6-year-old, both get sick for whatever reason. I fought it off for an entire week. I did not get sick. Now, a full week later, now I'm getting sick. And it's the same cold, and I haven't seen anybody else. So, my body's immune system fought for a week, and now I get hit a week later. I wish I would have just got it when everybody else got it, but no, it appears that I'm now getting sick now a week later. So, yeah, kind of grumpy because I'm not feeling well.
It's so interesting because, remember, years ago, pre-COVID, obviously, right? Years ago, Dennis, you always had a cold.
I know. I was just thinking that.
Kids always had a cold because
their kids were bringing it home from school.
Right.
Yeah. I was just thinking about that. The other thing too that you got to be. I mean, they're like, look at GME. I mean, who want no hodling in GME here. Look at that.
It actually had an interesting move. A lot of people talking about that move being manipulative yesterday at the close because the volume basically doubled in the last 5 minutes, but it was getting added to the S&P 400, which took place today. So you have, obviously your ETF, your indexers, all trying to work the close because they've got to go into it, added into the S&P 400 as of this morning. So that was why we had the huge volume spike on the closing print and 5 minutes before the close. I actually wasn't paying attention to it, but I'm assuming it probably had a buy and bounce, is why it ran up for a few minutes there. And then it looks like it kind of gapped down on the close where the trade got a little bit crowded. So just because getting added to an index doesn't necessarily mean it's going to rip higher. Sometimes it can gap down too. In this case, it did rip higher right before the close, but then gave a lot of it back on the closing print. So no manipulation here. GME, this is just index. We see this again and again and again. When a stock is getting added to an index, you see a huge volume spike on the close.
Yeah, and it's far away from that now, which is spiked up to not even relevant today, 158.89. There was huge volume in the after hours too, coming right back down. Just these charts are just not looking good. AMC here, that's coming down. So you had that former low of the move at 30.27. You got the bounce. Yep, that's it. We'll see. It all started when it broke out over 20, but first things first, low of the move at 30.27.
Earnings.
Yeah. I guess
should we go General Motors.
We can go GM. Yeah. The earnings were okay, but the guidance was light.
Guidance was good. What are you seeing guidance like?
I'm seeing fiscal year EPS guidance in the low end of it was 540 to 640 versus 640.
Oh, Q2.
All right. Well, I'm looking at the whole year. So yeah, Q2 was good. EPS was good. Sales was good. Again, full year EPS guidance.
What's messed up is I'm just looking at the Pro here, and I imagine the Pro is right. But on CNBC, when that earnings broke, they came on and said GM is raising full year fiscal year guidance. Like, I never actually looked at the Pro, so it looks like CNBC actually got it wrong. Surprise.
Interesting. But also, what you have to contend with here is, we still have chip shortages, right? So I imagine, to me, I imagine there's not much clarity either way because they still don't really know how long. Maybe they do know how long these chip shortages are going to last. And it wasn't their headline. It wasn't yesterday. It was maybe the day before that they're closing another plant again. They're reclosing the plant because, again, they don't have the chips. I think that was over the weekend. It may have been Monday. So, in any case, what is the stock doing?
I don't know. I'm just looking, and the Pro does have that. I'm looking just on Twitter because they clearly said, on CNBC that they were raising guidance. And I'm just looking on Twitter and some other people saying, yeah, they're raising their full year outlook. But when you look at this from the Pro, it surely doesn't look like that. So and obviously the stock action doesn't look like that either. That's why I tend to think that the Benzinga Pro is correct.
You know what? This isn't the first time in the last 20. Yesterday, I don't know if you saw, and this is off topic, but the Activision report was very confusing as well. There's a lot of confusion around the numbers for Activision. So this is the second time in this overnight session that I've been confused on earnings numbers. And you know what? Because here, let's see here. They raised their. Yeah, so you see, they did raise their guidance for the year. It was a raise, but it was still below estimates. that's so technically both right.
So
it's down a
what do you think?
$1.87. It's down a $1.89. That's what we know for sure. Raised guidance, no guidance. But this thing gaps around quite a bit. We'll see what happens at 55.86. That fills this gap here. And then after that, you're looking at 55. If you're looking for a resistance, 56.75. That's the last 3-4 lows. So that's going to be your resistance. So 55.85 we're at right now, potential support. And those 4 lows is resistance. Good question here, Dennis. Is there any standard evaluation or fundamental to add to stock to an index? And I'll say no. It's just based on market cap, right? They could
Well,
care
it depends
less.
on the index. So
Okay.
no, that's not correct. It's different for every index. I mean, the Dow has,
Oh, that's true.
the Dow has different, criterion, which isn't, than the S&P. The S&P, we used to say had to be the 4 profitable quarters in a row, but we just saw 2 stocks get added to the S&P 500 that aren't profitable. So I don't know. I think they change it. It's a moving target. You can add pretty much anything, I guess, but they have usually certain criteria that the S&P likes to follow, but every index is going to be different.
So, like, for example, the S&P 500, because let's just start there for a second, okay? In order to be eligible to be in that index, you have to, be a U.S. company. You have to have a market cap of at least $11.8 billion. You have to be highly liquid, whatever that even means. That's subjective, right? Public float of at least 10% of shares outstanding, and its most recent quarter's earnings, and the sum of the trailing 4 consecutive quarters' earnings must be positive. But there's also a committee. That's how they do things. They have a committee that votes on who's in, who's out. The committee can decide to overrule any one of those factors if they want to. But yes, it does depend on the index. Every index has its own rules. That's the sum of it.
Good question.
Good question. Thank you. Not thank me. Thanks to whoever asked that. Let's go to Activision here, because I mentioned it before. I was confused on the Activision numbers because there was some weird adjustment or deferral. There's a large difference between the GAAP earnings and the adjusted number last night. So I didn't quite know what to make of this, or how to make heads or tails of the numbers. All I do know is that their monthly active users went way up, and the stock went way up as well.
And the bar. So we talk about this. If you're reporting second, you want the company that's reporting first to basically shit the bed. And Take-Two did that. So the bar now set extraordinarily low. And I'm saying SHIT is okay to say on the show today because I'm feeling sick. ATVI had a good quarter, but because Take-Two got absolutely annihilated yesterday, it was down $20. I own Take-Two in my long-term portfolio. Not good for me. I think you see more of a bounce in Activision Blizzard because everybody hitting Activision Blizzard yesterday, and I mean they smacked it. Activision Blizzard was $82, it smacked down to $77 before it ended up closing to $79. So I think it's like the low expectations were right there, and all of a sudden it's like, wow, this quarter was pretty good. So, and that's why they're ripping it higher here. Where it goes from here, you now have an overhead supply issue. 85 looks like a huge level for me.
Yeah, good job.
Can it continue up? There's not much between 85 and 90, but, you just got a stock that got spanked. Now you get the 10% dead cat bounce. I think I'd be a seller more than a buyer at this level.
Great call. 85 just happens to be your pre-market and after hours high. That spot's right in the middle of 2 lows from the 29th and 30th, 85.22, 84.65. So if the bulls can, get this thing 85 bid and hold it and run it, there's nothing on the dailies until 87.30. But right there, getting into that area. And also, Spencer, that also had some news. They had someone leaving the company, right?
Exactly. So you talk about the low bar plus, there's the low bar from Take-Two, but there's also the low bar from the fact that there was this lawsuit hanging over them, and they just ousted the head of Blizzard, right? And they got that news out yesterday morning. So I guess they got the bad news out of the way. But low bar to clear for sure. and so that always helps.
And isn't they like, as far as like the stay at home versus reopening stocks? I mean, is it starting to get a little bit murky here? Because if this, this is definitely, we categorize this as a stay at home stock.
Yeah.
And it's, they're both going down. The stay at home and the reopenings are both kind of going the same way right now. So a little bit more, difficult to make that differentiation now.
It's such a good point you're making here. I mean, I look at the S&Ps basically at all-time highs, and I think, what is at all-time highs? Bring up a stock, bring up a random stock, and bring up the 90-day. And there's just a ton of stocks down 10 to 15 to 20%.
Random stock, Caterpillar.
I mean, yeah, you got Activision Blizzard, which you're saying gaming stocks. Caterpillar is off significantly. It was 245, now it's 208. I mean, I guess you could say these are, infrastructure plays, but, we got the infrastructure bill coming and, it hasn't helped this at all. General Motors, obviously just reported earnings significantly off the highs. People are saying, well, it's FANG helping it. Well, Amazon, though, 3,300, it was 3,700. It's rotation every day that keeps us higher. Procter & Gamble, Pfizer, consumer staples are at all-time highs for the most part, besides Clorox, which is obviously had the disaster yesterday. So that's one area, but it's a smaller area of the market's keeping us up. But the banks are, 15 to 20% off of the highs now. There's individual tech stocks like Microsoft is near the highs. We're just looking at the big ones. Facebook, Google are all somewhat near the highs still too. But it's like there's the tale of two markets. You got the indices that just don't seem to come down, and then you have individual stocks where there's a lot of stocks that have been hit pretty hard. So it's got to be one of the ugliest, all-time high markets I've ever seen, because this doesn't feel like an all-time high market. It really doesn't.
No, it doesn't. It doesn't. No. Royal Caribbean, those are some bad numbers, but let's see what the market does with that. Look at Royal Caribbean. That has really come off too, Spencer. That just broke. You want to do the RCL
reopening
number?
Trade has just been ugly.
Look at that. Yeah. You want to do the RCL numbers?
Yeah. Yep. Out this morning. No real surprise. They're still not making money.
Yeah. Are they doing any selling?
Let me look. So anyway, the numbers they lost $5.29 per share last quarter, which is about a dollar worse than expected. Sales, I'm actually sort of impressed that they made $50 million.
Yeah, how the hell they do that?
I'm not quite sure.
That's impressive. You're right. That is impressive.
Yeah. So let's see. They expect to incur a net loss for the current quarter and for the fiscal year, obviously. So when, I didn't look to see if they said anything as far as when they're going to set sail again. Let's hop into the press release and see what I can find. While I do that, you can look at the charts.
You just got a quick spike down, but you didn't come anywhere near yesterday's low of 71.79. So you could see from the dailies, you have that low, you have your low just under 70 and the low of the move. But the fact that as poor as those numbers are, that you haven't taken it to yesterday's low, kind of makes me think there's a few buyers out there. I mean, this thing was over $80, 81, 82 in the middle of last week. But you have your area, your daily areas of support. Sure, a lot of people see what happens at the close, 74.49, and minor resistance at yesterday's high, 75.17. So, I mean, bad numbers. It's got hit going into it. Let's see if it can hold or even get near yesterday's low at this point.
Yeah, there was a press release out yesterday where they announced the schedule for when they're going to go get back into the water finally. But I'm having a problem
tough.
On my pro feed, so I'm having to go straight to the website and find it.
You still got your NCLH, Dennis? I know you kept a little piece of it.
No, I sold it up at 28, I think.
Oh, good for you. Yeah, wow.
I mean, at a certain point, these stocks do get attractive again. The reopening trade, has got hammered. If you're in any of these reopening stocks, they're all moving together and they're all ugly. It's, at a certain point, if you think Delta's going to get it, they're going to get a handle on it. At a certain point, they're probably a buy. But, I said yesterday, I don't know. The Delta thing, I feel like it's still in the early innings for Delta here. Unfortunately, I don't want us to be in the early innings. I want us to be by COVID. But, it looks like it's, Florida making new record highs. I mean, it's difficult. It's difficult to just say, oh yeah, we're all just going to jump back and go to Disney World. Right now, they're talking about adding mass New York, and like we're going backwards right now. So we need more clarity on Delta. I think we do get a handle on it eventually. I don't think we're going to go back in a lockdown or anything like that. But it doesn't mean everybody's flying on their planes and going to Six Flags and Cedar Point and Disney World and casinos.
I told Spencer.
Those trades are awful right now.
Yeah, look, I told Spencer I was going to give my travel tip.
Yeah.
Don't how? Yeah, I like to board the flight as late as possible, right? Because just less time on the plane. Well, you can't do that. I did that on this flight, and my seat got taken over.
Wow.
And well, not taken. I mean, taken over in a physical space, right? So the person that had, I always take the aisle. So the person that had the window was a little bit bigger than me. And they put up the armrest, and they were basically way over the line, and they were in my seat. And so I tried to sit down, and Lisa's like texting me, put the armrest down, put the armrest down. And basically, if I would have put the armrest down, okay, then I would be basically telling that person that they're like overweight and they're on my seat. So it was a short flight. So board early, get your territory. I know you don't like doing it, but you got to board early now when you're there.
I won't be flying anywhere. I'm still.
Yeah.
Thanks for that advice.
I went outside camping and I got sick.
With
crazy
regards,
stuff out there.
regards to RCL, they did announce yesterday that all their ships will be back sailing by the spring of next year, and they're gonna start getting back in the water in September.
Yeah, if everything goes well. I mean, nobody knows anything, though. Again, okay, so we talk about in the markets all the time. Nobody knows anything. This Delta, nobody knows anything there either. We don't know where we're going to. A year and a half from now, we have no idea where we're going to be. Nobody knows where we're going to be. So they're just projecting out and say, oh, yeah, we're not getting the ships all in the water next week. So we'll just throw it out there a year and a half. Oh, yeah, we'll be back in the water by then. Yeah, in a perfect world, maybe and probably, hopefully. I hope so. But we don't know anything. So many unknowns. These stocks, some of them are cheap if you're looking, but RCL is not one of the cheap ones, in my opinion. Even if you're looking, at somewhere some of these stocks have come from, there's not still. Even though we've come off the highs, you start looking, from where the earnings were prior to COVID. I mean, RCL was trading about $110 before COVID started, went all the way down to 20, came all the way back down to almost $100. I mean, all the way back up without ships in the water. So probably you could say when it was getting back up to $90 or $100, people just getting overexcited. The great reopening trade was supposed to happen, which, started to happen. And then they decided to throw another variant at us. So at this point in time, I just have just too many unknowns for me to own any of these stocks, at least to buy any more of these stocks.
What about SPOOs are leaking here again?
We had a weak ADP number.
What happens though with the SPOOs, Joel? There's some rotation, and then they'll buy something else up. I mean, this is just a market that doesn't go down for any reason whatsoever. I'm not fighting the tape, I'm shorting stocks here and telling you, to go to cash. And I mean, it hasn't worked. The indices have just held up forever, and they continue to hold up. You get a sell-off yesterday. You're like, okay, well, maybe this is, finally, going to start to sell off a little bit, and they buy them right back. You cannot break the buy the dip mentality in this market. It is there. It is strong. It is going to take some serious bad headlines or serious something to break the SPY, uptrend here. It is strong. It is almost at all-time highs. So as much as you want, you can look and say Delta's problems. Even if we go into, let's just say in a scenario where a lot of the world starts to go into lockdown, which we're starting to see in Australia, China, we're seeing in other countries, then tech stocks win. So it doesn't mean the S&P crashes down like we did back in March 2020. We're going to crash 35%. No, we're in a different environment. We've already been through this, and we know in that environment, you got all your tech that wins, and maybe that's why tech is so strong right now. Like people, talking about in the chat when I was just saying a few minutes ago, is no stocks making new all-time highs. There is a lot of stocks, tech stocks. It's all tech, like Datadog. Somebody was pointing out new all-time high. So there is some stocks that are making new all-time highs every day.
On the reopening trend, can we talk about Live Nation for a second? LYV, they had earnings last night, and listen to this. They said that June was the fourth best month in the history for Ticketmaster North America. Fourth best month in the history of the company. From the release, looking forward to 2022 and now also 2023, all our leading indicators continue to point to a roaring era for concerts and other live events. Obviously, of course, they're bullish. They're a concert company. That's what they do. But I don't know if you guys saw pictures over the weekend of Lollapalooza. On my screen here, I mean, it looked like it was packed. It was packed, right?
People want to do stuff. For sure they want to do stuff. If we didn't have this Delta variant coming, and we're in the early innings on that, all these stocks would be probably screaming buys at this point in time because, but I just don't know where we go. Where are we in 3 weeks? Where are we in 2 months? Did it go? I don't know the answer to that question. That's why I can't buy the stock either. This is a pure reopening trade. It's a nice lift. It's a good, commentary but are they coming in and buying these stocks? No, every time these stocks have rallied to a certain extent, they've been selling them off in the last month. And that's because of Delta. You're safer in tech right now.
Look at that. 82. You didn't get there in the pre-market. You only got to 81, but brick wall at 82. So I don't know what the CEO is saying. I don't know what the variant's doing. That 82, 1, 2, 3, 4, 5, 6 highs in a row there. We haven't hit it yet. So it busts above 82, holds 82. Yeah, you got some room up to 84. But right now, you got the pop after, wow, the stock is near all-time highs. I can't figure that out. But anyways, if you're trading just not for today, but 82 is a longer-term level in LYV. I'll tell you right now, I haven't been to a concert, and I got Michigan football season coming up and got my tickets right here in the drawer, and I don't know what I'm going to do. I don't know if I want to sit outside for 4 hours with a mask on with 110,000 people. I don't even know if they're going to get 110,000. That's gonna be interesting.
I think you'll go. Let's do Lyft. We'll do Lyft quickly. It was a good quarter for Lyft. Reopening trade, obviously. Surprise profitability on an EBITDA basis. For the first time. Active riders up almost 100% year over year. Revenue.
Wow, easy comparison.
I know. I'm just saying. Revenue per active rider, nice gain of 14%. So it's not just the number of riders; it's the profitability of each rider. Anyway, stock was up. I looked. It was up. I swear, it's not up anymore, or it's not up as much. But yeah,
it gave it all back again. And people in the chat are saying nobody is scared of Delta. There's so many people in our chat that are just nobody's scared of Delta. I will tell you, the stocks are telling you a completely different story. So maybe there's no people, in your opinion, chat, whoever is saying that in the chat, that's scared of Delta, but the stocks are scared of Delta. Uber, $60, $42. Lyft, same thing. You can look through all these stocks. It is very, very clear that we have an anti-reopening trade in the last few weeks. It is so clear. So clear. Tech has been getting a bid. So, I mean, this is Lyft. It has a pretty decent report, but what do? They sell it off anyways. They're selling all rallies and anything that's reopening. I don't know when that changes. I hope it changes, but I'm a trader and I have to identify trends. And if you've been selling rips on the reopening stocks, you've been making money. If you've been buying dips on the reopening stocks, you've probably been struggling because they continue to dip lower. So, as a trader, I've got to identify those trends. That's my job. Right now, you can clearly see tech in favor. Reopening is not.
Yeah, big pop over 60 and then the fade. Let's see if it can stay green on the session. Made a low 53.84, rallied 55.38 close. So, and you're trading up 29 cents. I just don't like the fact that you pulled back so far from the high. So, if this goes red, I don't think you see yesterday's low at 53.84. But you don't want to see this go red early in the session and lose that closing price of 55.38. And use it. But now that we backed off, forget about the pre-market high. Just look at yesterday's high, 56.38 as potential resistance. I don't know. I mean, I haven't been in a cab or an Uber. When we were in Philly, of course, we took all Ubers, and it just seemed like they were just really expensive. I don't know. I mean, maybe it's just my perception or where I'm going, but at least we took a cab from the airport. I kind of like to see it in a cab. It goes. You see what you're paying. You hop in an Uber and you're just that's it. You paid. You're done. Yeah. I don't know. I mean, no cabs in Philly. Can you believe that? I mean, what about New York? We have anybody in New York? You got to still see cabs in New York.
Yeah, you do, obviously.
But holy mackerel. I mean, there was Emily, we were discussing it. Emily's like, no, Dad, there's hardly any cabs in the city. I'm like, what are you talking about? There's got to, I mean, going on the street corner and whistling and getting a cab, man, those days are over with. You got to be on your phone and get the Uber and you can see how close he is. I don't know. Whole different world, but those stocks, man, oh man.
All right, well, let's talk some trading ideas here with our guests. Let's get some options trades. CC Lagator is from Options AI. He's the co-founder. He is a former options market maker and specialist, and he's joining us here on Pre-Market Prep. CC, good morning.
How's it going, guys? Great to see you.
Good to see you as well. How's your summer going?
It's good. I'm out east on Long Island.
Oh,
and I'm typically in Boulder. But
nice.
yeah, so it's nice. I like since the last time I was here, it's gotten a little more R-rated. Dennis is sick and swearing. So I might.
He says he has a cold.
I might let a few fly.
You're welcome, CC. We've missed you. We always love CC's commentary. What do you think of this overall market? I mean, it's so interesting. The indices are at all-time highs. Tech's been holding us up. But you have a lot of other sectors that haven't performed that well. What are your overall thoughts here?
Well, no, it was interesting, the discussion you were just having, because so I'm out here, sort of east end of Long Island, and just in the last few days seeing some behavior changes. So when I first got out here, about a week ago, no masks, going to the grocery store, things like that. Since that, the Delta and the news about vaccinated people potentially being, contagious, and, it just totally changed. And now I went into the supermarket yesterday and half the people were masked all of a sudden. So, I think you are going to, see some behavioral changes. And as you were saying earlier, nobody knows what's going to happen next. And ideally there's enough vaccinated people that, it may be sort of more endemic than pandemic, but nobody knows. So yeah, I've already seen, anecdotally, obviously, I've seen behavioral changes. I've seen way more masks in the last couple of days than I was last week.
I mean, that's what we're seeing in the market with the tech bid and the reopening trade stocks to start coming down. Do we just stay long tech? Is that like the safest play? I mean, that's what the market is telling us.
Yeah, right. Like there's been nothing can shake those stocks, it seems, right? Like it sort of heads you win, tails you win.
Yeah.
Seems, especially those big ones, So yeah, it's very interesting. I mean, I think it was very like the Live Nation is, I've been buying concert tickets, right? The last couple of weeks, and there's such like a jammed, I go to see a lot of live music. There's such a jammed calendar this fall, but then all of a sudden you're thinking, is something that I was thinking of doing 2 weeks ago now no longer, in play. Like it's really wild to see the things that have changed in the last week. And I think you're starting to see that in the market for sure. And then that could change in 2 weeks.
Everything changes continuously.
We might get good news, right?
We hope so. We hope so. That's what we're shooting for, is the good news here. Yeah. So, okay, so where are you looking? Talk to us. Talk to us some options. Where are you looking, CC?
Well, it was interesting. You all, started off the show with the Robinhood options being listed. And it's funny because, I was thinking we were out of the meme stock era. And I was going to come on and talk about how normal the VIX is, at about 18, which is like near its historical average and things. But the Robinhood, is very interesting what it's done the last 2 days. And what I would say from an options perspective is I would imagine it plays out very similar to the GameStops and the AMCs. And I think if people are getting involved in options in Robinhood when they list, is what I would imagine they look like is the same thing we saw in those, which is huge skew to the upside in the calls. And I'll sort of break that down. How that works is as these meme stocks start going to the moon with the rocket ship emojis, there's such demand for those really far out of the money options. And what that does is the market makers, of course, raise the prices on those to get out of the way of all this retail demand. And what ends up happening is those are skewed much higher than the options that are trading closer to where the stock is actually trading. And what that provides is if you're bullish in one of these stocks, you know, and I think it was Dennis, you mentioned earlier, you play for base hits, not home runs. When stuff gets out of whack like that, you can actually position for home runs as if you were positioning for a base hit, because you can buy at the money calls, sell far out of the money calls, turn it into a call spread, and it's a very cheap, very wide call spread. And you know, that's something that I saw in the GameStops and the AMCs. And the other thing that happens with those, well, two other points on the meme stocks is as they go higher, vol goes higher. Once they stop going higher, vol comes in, right? Which is sort of the opposite of how a traditional stock works. And why that's happening is when those stocks are going higher, there is no limit to how higher they can go, you know, how high they can go. And it becomes almost impossible for the market makers to price those options. And once they start to settle back in, the volatility compresses, and those are the moments that people have to be very, you know, careful about owning options premium, because once those stocks start going sideways, I mean, volatility gets absolutely destroyed, and there'd be no way to make money being long calls or puts. Like even puts, like as those stocks go down, you could be long puts, and volatility is getting crushed so fast that your puts are going down even when the stock's going down. So, oh, and one other point, which will be interesting, look to what the highest strike that gets listed in Robinhood is. I saw something on Twitter earlier, and I haven't seen the options yet, but what you would see in those GameStops and those AMC options is the highest strike that was listed, the stock would often stop right there. Because of that, what was happening was the retail order flow was running out of strikes to buy. And what would happen is that the market makers no longer had to hedge above that point because they were basically maxed out on their hedge at that point. And it's that term you see a lot now, you know, like short gamma squeezes. Basically, the gamma can run out when the strikes run out. So that's something to keep in mind. If, you know, like for instance, if this thing keeps going to the moon and the highest strike is 70, watch for it, you know, at that 70 level.
Do you look at anything technically on that? Like, do you look for like does it usually precede like an inside day, or the volume just starts to taper off, or it's just do you just see it by looking at the different Greeks?
I think from what Dennis said something earlier, you know, like when you were talking about trading Robinhood and, you know, in those first few days, and there was only one technical thing to look at. Well, everybody's looking at that same thing, right? And so it becomes self-fulfilling. And it's the same with options, you know, mentioning those, you know, those strike things, is that I'm not the only, you know, I didn't just reveal some big secret about the highest strike in one of these meme stocks. Like, people will be looking to those levels, and they will be doing the same thing in the equities. You know, it becomes difficult to tell what's, you know, the tail and what's the dog. And, you know, and then you'll see, you know, when I've come on the show before, we've talked about, you know, expected moves and things in the options market. Those things can become pretty self-fulfilling. You were talking about Activision earlier, and I think, you know, what is it down, or what is it up on the earnings? I think it was like 6.2%. Like the expected move I'm looking on Options AI is 6.4%. Yeah. So those kinds of things can become somewhat self-fulfilling, because everybody's looking to those same levels. Everybody's positioning in the options to those same levels. So
the options can drive the bus to a certain extent.
Yeah, it's hard sometimes. And I would say, you know, in a big stock like, you know, let's say Amazon or something, you know, obviously the big, you know, mutual funds and, you know, those things are driving the bus. But like, you know, sometimes in these meme stocks, there's, you know, these people are looking for leverage, right? And where are they going for leverage? They're going into the options market, and they're trying to hit home runs and the YOLO thing. And that can often, you know, that can be the tail wagging the dog for sure.
CC, one other thing I wanted to ask you about. People get a lot of questions. You see, oh wow, there's a huge VIX trade, a huge call buy into VIX,
Mhm.
and it's like, oh well, that's implying a 10 to 15% down move in the market, and
Yeah.
I think what people fail to recognize, and I can remember this was a while back, there was a big hedge fund. They talked about it. I think they called it 50 cent. And
Right.
whenever some VIX options got to 50 cents,
Right.
they bought a boatload of them. But what I
Yeah.
think what people fail to recognize is that sometimes they're just getting long,
Yeah.
getting really, really long, and they're using that as a hedge. So could
Yeah.
you talk about that dynamic in the VIX options markets, please?
That's exactly right. And so, there's a lot of talk about unusual options activity, and I think it is interesting to keep an eye out on. Making conclusions based on that is very difficult, right? You do not know what the rest of that person's book looks like, right? And so that's a great example. Is for all we know, they're getting super long the market and they're hedging against a black swan, right? And so what's the information we're supposed to take from that? That somebody is hedging against a black swan, and we don't know whether it's outright or just so that they can buy more and get longer the market. So it's really difficult. I think the best way to use those kinds of unusual options, prints and activity, is to sort of like, all right, somebody's interested in this for some reason, right? And let me go in and do a little bit more research. Obviously, if there's a biotech stock that there's rumored to have like an FDA approval or something, and then it looks like some big hedge fund buys a ton of calls or something like that, that could be something that's just outright obvious. But in most cases, I would say the waters are very muddy and you have to be very careful with those. But what I would do when I see things like that is I start looking at charts, and I'm like, why did they pick those strikes? Like what's going on here? And that's the way I would look at it. Is it's interesting, but you should not assume that you know why they did it.
One other question regarding market makers. Someone asked of whether or not when you're trading, are you trading with another trader or a market maker? I would say a majority of the time you're trading with the market maker, and they're hedging. They're immediately hedging with either another option and a stock. That's why sometimes when you see a huge option trade go on, you see a corresponding move in the stock, and that's just because they're just trying to lock something in. They don't care whether that person is right or wrong. They're just locking in that little fraction of inefficiency.
And it's interesting. I just wrote about this last week, and I was and it's on like learn.options AI. You can go and read this article, and I can maybe post it into the chat. But I was writing, I was a former options market maker, and I was writing about liquidity in options and how that works, right? So if you are trading in equity, you have a very good chance that you're trading with somebody else, right? Once you go into single leg options and you're trading a call or a put, occasionally there will be another retail order being represented mid bid ask, right? Once you go into the multi-leg options, especially, you are almost 100% trading with a market maker, right? And the way that all works within options is the market makers have this model on all those strikes you see on every call in the put, and they have a fair value for every one of those options, right? So if you come in to buy a call or to sell a put and you're trading with a market maker, they have a fair value of 110 on that call and you're willing to pay 115, they'll sell you that at 115. And if there's an opportunity for them to go and execute another strike to hedge that option on a 5 cents edge on that other one, they'll do that and they'll pair that off. They don't have the luxury, like in equity, of going home flat at night. There's just too many strikes, too many expirations. It's just there's so much stuff, and so they are carrying these positions, and the way they're working is trying to build up this theoretical edge over time and hope that by expiration most of that comes in and they profit from that edge. So yeah, when you're in the options market, most of the time you are trading with a market maker, and that market maker is simply an algorithm pricing those options. And you have to then explore where that liquidity is with that market maker when you put in a bid or an ask in the options trade.
CC, just before I let you go, is there any specific stocks or setups or trades or strikes that you're watching this week, next few weeks?
Let's think. So it was interesting, like talking about that Activision Blizzard. Let me screen share real quick.
Okay.
I was looking out, like speaking of the, and this kind of goes to some of the things we've been talking about. Let me pull up on the screen.
In the meantime, we're on with CC Lagator. He's the co-founder of Options AI. His Twitter handle's up on the screen at OptionsLearn. There we go. Oh, what do we got here? What do we got here?
Right. So this is an expected move chart on Options AI. And I pulled up Zoom because I was sort of going through, as you all were talking about, reopening and opening trades. And it also sort of dovetails a little bit to what we were talking about with technicals. So, this is a 3-month historical chart in Zoom. You can see the move it made higher, and then, as it, came back down, and it's sort of established a little bit of a range here, right? In the last, sort of, let's call it a month and a half. If you look at the options out into the future, this is an expected move chart. And basically what options are saying is that options are pricing for it to stay within that range for the, out until the end of August. And then look at this, see how it widens right here from here to here. And this range in here is basically 350 to 400, right? So options are pricing Zoom to stay within a $50 range. This is earnings. So earnings is at the end either the end of August or right at the beginning of September. And the options are now saying if Zoom were to break out of that range, it's probably not going to be till earnings. And so when you're trading options in something like this is very useful information, because if you are trading for Zoom to go higher before earnings, you do not want to own premium above this prior high. And that's what the options market is telling you, that you want to play for the move from here to here before earnings, but not for a breakout. If you're going to play for a breakout, you need earnings to be good. It's basically what the options market is saying. And so on options AI, say that again.
Go ahead. Sorry.
Yeah. And so on options AI, the way that would work is, like you would say, like, I'm bullish out to, let's say, right before earnings. It's a 7.4% move higher. And you can come in here and see, a debit call spread up to that level. And this is basically, look at that prior high back here. And you're saying, I don't want to, you're buying a call here, you're selling a call at that prior high. And you're not owning any of that premium up above that level, because, it's an unlikely event that Zoom makes a new high before its earnings report.
Yeah. Bottom line is you got to go further out if you're playing. If you're playing for a breakout, you got to go further out.
And that expected move really helps you, when you're thinking of it. Not only is it strike selection, but it's time, right? So if you think Zoom's going to go back down to here, the options market is telling you how far out you have to go. You basically have to go out towards, Halloween.
All right, CC Lagator, that was fantastic.
Yeah, really good.
Always,
excellent information.
Love the visualization of the options chain there. You don't see that every day, the expected move. All right, CC, thanks a lot, man.
Yeah, great to talk to you guys.
All right.
Have
a good one.
CC.
Have fun out there on the East End. All right.
Really good information.
Great
Continuing to go lower here at the lows of the pre-market session, down 17 handles, 43.98. Just been steady drip here. So back under 4,400.
Led by the small caps once again, IWM. And again, that's reopening. A lot of reopening stocks in IWM as well. So you clearly see this morning, once again, the tech trade, or QQQ only down 0.17%. You're seeing a 1% move between IWM and QQQ again here this morning. And basically, tech strong and rest of the market not so much.
Let's do a couple questions from chat before our next guest at 9. We had a question about Joel's old favorite, Tanger. Still don't know how to pronounce that. SKT.
Tanger.
Is it
That's
Tanger?
what I don't know what it is. I call it Tanger.
Does anyone know how to pronounce this company?
Tanger. I'm going with Tanger.
Tanger.
SKT. How do
I
they
think it's
come up with
Tanger.
that? Yeah.
We're not French. I think it's Tanger.
Well,
Tanger.
you're
Tanger.
Tanger? Target? No, Tanger. We're going with Tanger.
All right, fine. Anyway,
What's up? What's up with Tanger? Talk to me.
they have earnings tonight.
What's the expected move? That's what we need.
Get off.
Bring CC back here and get the expected move. We can quickly get it for you as well, but it is so important. You know, what CC was just talking about is, the same thing I look at too. If I'm making a directional bet, you want to always be looking, look at these open interests at certain strikes because those can come into play. The big whole numbers can come into play, not so much because they're big psychological numbers, but because there's probably some open interest there. But, you quickly get the expected move by just adding up the calls and the puts premium. Now, again, we don't have weeklies on Tanger, so we got to go all the way out to August 20th. But, if you were just taking the 17, which is close, it looks about a buck. You got 65 to 75 and 70 to 75. You're about $1.40. But that's, again, got a little bit extra time premium jacked into it because it's 14 days away. There's no weekly. So you're about $1.40, the expected move.
All right, everyone's making fun of me for the pronunciation. I genuinely can't remember. If I could remember, I would get it right.
Am I right? It's Tanger?
Yeah, they're all agreeing with you, which is fine.
Tanger.
That's pretty easy, isn't it? Tanger?
Look, there's only so much
room. Have
to
be hard, Joel.
There's only so much room up here for stuff, for new information. Okay, this is not going to get retained again. Sorry, not going to happen.
This is reopening 1650. Good support. You're trading above yesterday's high, but just on an odd lot here, or 300 shares. So not putting a lot of faith in that. But we had a strong close, or 16.9. So let's hold that close 17.11. After that, gets closer to 18. But with earnings coming out, looking for a quiet day in TGR.
I don't know if you guys saw this. Well, I know Joel did. I don't know if Dennis did. We got an interesting question on Twitter with regards to Marvell, MRVL, because they announced an acquisition. They're buying Innovium, and in order to do the acquisition, they're issuing. They're doing an offering. They're using the offering, the shares that they're issuing. What?
To finance the acquisition.
Right, to finance the acquisition and to do the conversion, so the Innovium shareholders are going to get these new shares. And the question was, is this dilution? It's the number of shares is I think 19 million. I think 19 million shares is what they said.
Whenever you're issuing new stock, it is always dilutive. If it's you'll see stock sales from you'll sometimes see an offering. And it's from company insiders, it's from a big shareholder. That's not dilutive. So you don't see, the stocks get hit on those. Then you have dilution, two types of dilution. One is dilution to grow, one is dilution to survive, really. And that's simplifying it all. But, we saw it back during, March, April, May, June last year. There was dilution all over the place as, airlines were issuing stock and cruise lines and casinos and a lot of people who are companies who were struggling with COVID were issuing new stock in order to survive. Where we know this is dilution in order to grow. So yeah, it's dilutive to MRVL, but you're getting something else. So even though it's going to be dilutive, you're bringing in another company as well. So you're getting a bigger piece of pie, even though you're diluting it. So it's not necessarily a bad thing. I always don't mind dilution to grow.
And right now, the market is saying that they don't mind it either.
And I own Marvell, full disclosure.
Yeah, it's down 25 cents, 51.09. The only thing you need, 61.09. Seller at 61.50 area. You got to take that seller out. 61.43 and 61.48 are your highs from the last two sessions. So I'm gonna hop off here, go over to pre-market prep, cover all these tickers that we missed. So Spencer, I'll see you at 3:30.
Dennis, feel better. See you, Joel. Dennis, feel better. Well, you seem like you're powering through. You're doing a good job.
That's all you can do. That's all you can do.
You're powering through. All right. Feel better. My next guest, everyone, has all the buzzwords. Okay. Diamonds, blockchain, What more do you want? Frankly, Cormac Kinney is the founder and CEO of Diamond Standard. Cormac, good morning. Thank you.
Morning, Spencer.
Good morning. How are we doing?
Great.
Okay.
Diamonds are on a tear.
All right, explain this. I got this email, and I thought, whoa, I have so many questions about this, how this works. So explain to me what exactly the investment is here.
Well, it's really simple. We've created the first diamond commodity. It's fungible. It's like a gold bar for the first time. And that's a big breakthrough because diamonds are a $1.2 trillion commodity that no asset managers own today. But they own 15% of every other precious metal. So that tells us there's a huge pent-up demand now that diamonds are fungible, liquid, with low transaction costs, price discovery, and are as a regulator-approved commodity.
So what is the financial part? What is the security here exactly? Is it's a future product?
It's actually not a security. It's a commodity, right? So what we make are these coins. These are Diamond Standard coins. And as you can see, the diamonds are inside. The breakthrough is that these two coins, even if we make them 30 years apart, we can prove that these two coins are always equivalent. And every diamond coin that we make is equivalent because they contain the same geological content. That is the huge breakthrough because now you have a singular fungible commodity that's the spot. So what we produce is the good for delivery spot commodity. But as you mentioned, futures are a very important price discovery mechanism. We already have approval for futures, which will be listed on the CME.
So where are those diamonds from, though?
Well, that was part of the challenge. Before today, there was never a electronic diamond exchange. There was no price discovery or transparency in diamonds. My background is I built over 100 trading systems, and I managed statistical arbitrage for Tudor and Millennium, and I ran quantitative strategies, automated market making. That approach was how we created the diamond commodity by first making the world's only electronic diamond exchange. And we're the world's first and only market maker for loose diamonds. And we bid on a daily basis on about 16 million varieties of diamonds from around the world. So far, we've bought diamonds from 8 countries, over 50,000 so far.
The one thing I think everyone knows, the first thing they think about when they think diamonds maybe is they think blood diamonds. So how do you ensure that that's not part of this?
That's a huge part of what we're doing is we are bringing transparency and regulation into the diamond supply chain. We're regulated. We have regulatory approval for this commodity, in addition to the regulatory oversight by the CFTC of our futures. We're bringing that regulatory standard into the supply chain, requiring, for example, that all of our vendors participate in a transparent bidding process. They all agree to not use conflict diamonds and adhere to the UN Kimberley process. Also, we have anti-slavery. I mean, it's that, fundamental. We have to get our vendors to agree. You can't buy any diamonds that were, not that involved any unfair labor practices. So we are really cleaning up the diamond industry. But what's even more interesting, I think, is about 75% of the diamonds that exist on Earth that are accessible are already owned by consumers, which means that what's in the ground and what's in the supply chain over the next 50 years is only 25%. So ultimately, the majority of our diamonds are actually coming from consumers.
So you mentioned the CME. So there's gonna be diamond futures listed on the CME,
and options on the MIAX options exchange. That's correct. So first we're launching a physically settled future, which requires 20 of these coins. This is the good for delivery commodity. We already have custody agreements with 2 of the custodians that hold the gold for the CME gold futures. And then you deliver 20 of these coins, and that's the settlement of the futures. And down the line, we'll have financially settled futures as well.
Okay, getting a lot of questions in chat about the real supply of diamonds. So clarify that. Everything I know is that the supply is heavily controlled and just locked in vaults, right?
Yeah.
To maintain the prices. And that's my basic understanding of the global diamond market.
Everybody knows that, and everybody's dead wrong. That has been true for almost 30 years. So it used to be back in the 70s and 80s, De Beers did control the market because they controlled Africa and Russia supply. That was broken up 20 some years ago. De Beers has been a public company since then, part of Anglo American, and their inventory is public. So we know historically they keep about 90 days of supply. There's no secret stock room. The other larger supplier now is Russia. De Beers isn't even the largest supplier anymore. Russia is through Alrosa. They produce about 26% of the new diamonds per year. The Russians aren't keeping any stockpile. They're converting it to cash as fast as they can. So the diamond industry, I'll share a screen which I think you'll find interesting. The diamonds globally are worth about $1.2 trillion. That's more than all of the silver, platinum, palladium, and rhodium combined. And I'm talking about the above ground supply. Gold is obviously much larger at over $9 trillion. If you look at all of those metals, investors hold them as a diversification, as a hedge, and a store of wealth. But they don't hold any diamonds because diamonds were never before standardized. Every diamond had a different price. There was no liquidity, no price transparency, no exchange, no commodity, no futures, etc. So what we're doing is we're enabling diamonds to catch up with gold. That supply is about 1.2 trillion. The new diamonds per year that are dug up are only about 40 billion. So it's a very, very low 1% stock to flow ratio. That stock to flow is diamonds that are cut, graded, all of them go into jewelry. We've created the first mechanism to turn them into a fungible commodity. Our first and largest investor was a BlackRock fund formed by the chief investment officer. That gives you an indication of the institutional interest in diamonds because they're uncorrelated to absolutely everything else that they hold.
So that sort of leads me to my next point. Obviously you are bullish diamonds, but speak a little bit about the historical. I'm not even sure how you figure out historical returns of an asset class like this, but maybe let's start with there. How do you figure out? Because the selling point to BlackRock is like you just said, not correlated and historical, good historical returns, obviously, compared to other asset classes, equities, other metals, whatever. How do you even figure out historical returns on this, and what are they?
So the commodity didn't exist. What's interesting about the commodity, though, is that it contains the entire yield curve of diamonds. So with our automated market making, and we do statistical sampling, we buy literally every possible combination of carat weight, color, and clarity within a very large range. We bid on about 94% of all varieties of diamonds. So we know if we look at the history of wholesale diamonds, we can approximate the return and correlations of the diamond commodity if it existed back then. So the chart I'm showing now shows that wholesale price history over the last 10 years. And we're just looking at gold versus diamonds versus gold and silver. This is after the breakup of De Beers. You'll notice purple line is diamonds, very low volatility compared to gold and silver. Over the last 10 years, diamonds had the same performance as silver with a fraction of the volatility. Gold, since 2018, has risen dramatically. Since we announced the diamond commodity, we do have a reliable price index. And this is a chart that you can see behind me on the screen. But this is diamonds relative to the S&P 500, which is the white line, and gold, which is the yellow line. This is over the last 12 months. So diamonds have actually nearly matched the return of the S&P 500, again with less volatility, whereas gold has lost 10%. So diamonds are on an absolute tear right now.
Yeah, why might that be?
Well, a big part of it is because the commodity is available. All of the diamond vendors, obviously, they're well aware of our product, that we've now unlocked investors as a completely new demand in the diamond industry. That demand, they know, is going to go through several inflection points. We already have approval for the futures on CME. We've already filed the ETF in partnership with the NYSE to list on NYSE ARCA. That'll take a while to get approved, but all of this demand from the spot commodity, the futures, the options, the ETF, all of that is completely new demand on a very, very constrained supply of diamonds. So our expectation is for the next 7 years, as institutions build positions from absolutely zero, that diamonds continue to grow very, very significantly.
So is the institutional demand already there, or you have to go out and drum it up?
Well, we have an asset that we have a price history of correlation, which is uncorrelated to absolutely everything. And as a hard asset, it's a store of wealth that's a natural hedge against inflation. And we speak to pensions and endowments and huge asset managers every day. They're all concerned about inflation and the diminishing of their returns on these massive portfolios.
Okay.
Diamonds are the only natural resource at 1.2 trillion that's large enough that it can accommodate institutional portfolios.
Last question for you, Cormac. How exactly does the blockchain factor into all this?
So inside each coin, there's actually a wireless computer chip,
Okay.
which you can see from the back. That computer chip does 3 interesting things. Number one, it provides auditing. So BlackRock owns this. It's at JP Morgan's vault. They can audit it instantly. It also provides authentication. So you can use your cell phone. You can challenge the chip. There's also the optical pattern, which you can see to authenticate this. But most importantly, that chip stores a blockchain token. So while this commodity is sitting in the vault at Brinks, JP Morgan, or anybody else, you and I can trade that token. And that token is essentially a vault receipt. And it's an ERC20 fungible standardized token, which means it's like a Bitcoin with a real asset behind it that you can trade instantly and globally using your existing wallets and exchanges.
This is incredibly interesting. You know, I don't know a lot about this space. I have to admit, I'm skeptical. I've never heard of diamonds as an asset before last week. You know, at least not an asset with things like an index and, you know, spot price, et cetera, et cetera. So, you know, obviously people have diamonds that they, you know, that can be sold, you know, to any jeweler, but this is something entirely different. So I commend you for, you know, trying to, you know, bring it to the capital markets. I do hope it works. I'm interested in the blockchain aspects of this, though that still remains a little fuzzy to me, to be honest. But the whole thing seems interesting. You're basically building up a market from scratch, and I think that's incredibly interesting. So Cormac Kinney is the founder and CEO of Diamond Standard. I think we all learned a little bit today about diamonds. I did. I have a lot more to learn, I think. But we'll looking forward to keeping tabs on how this, you know, if we end up, diamond futures and diamond ETFs and ETNs and all sorts of financial products that are backed by diamonds, I'm here for it. So thanks for coming on today, Cormac, and looking forward to see how this market progresses down the line.
My pleasure. Thanks for having me.
All right. Chat, you all seem pretty divided on the whole thing, but you can't, you gotta give someone credit for creating a new market out of nothing, which is basically what they're doing. They're bringing the diamond market to our markets, which, if what Cormac is saying is true, then there's already some institutional demand for it. And if there's institutional demand for it, you can make it happen. So I thought that was interesting. It was something a little bit different. It was off the beaten path. It was not about the stock market or anything like that. But interesting stuff, I thought. And so I thank Cormac for his time today. Okay, here's what's going to happen. It's 9:17. What we're going to do right now, I'm going to end this stream. All right, and we're going to start live trading with Benzinga. Here's what's going to happen. Beginning like right now, basically, myself, Mitch, Ryan Faluna will be on the next stream that will start when I'm done here. And if not, maybe they've already started. I don't even know. And we're going to live trade through the open. And then at 10:30, I'm going to have David Green join me. It'll be me and David Green from 10:30 to 11. We'll recap his morning, what worked, what didn't, that sort of thing. That'll be the plan for the morning. We've gotten some good feedback. I'm reading the chat right now. Gotten some good feedback from what we did last week with the group of us at the Open. Got some good feedback from David, trying to figure out a good mix. So that's what we're going to do. Myself, Mitch, Ryan Faluna on starting right now. David Green on at 10:30. SPAX attack after that. Normal day right after that. So all that being said, please remember all the information from our show is meant to be used as informational purposes, not for investing or trading advice. Thanks to my guests today, Cormac, Kinney, and CC Lagator. Thanks to all of you for the comment, the engagement, the hate, the love, whatever. All of it is good. Just, do me a solid and drop me a like. I'd appreciate that. All right, I'm ending the stream. It'll redirect you to live trading starting right now, and we'll see you guys at the Open.